Good afternoon and Happy New Year from IMD. We're delighted to have you on board again for 2013. We have some great webcasts lined up for you this quarter. If you'd like to see what's coming up in the next few weeks, just click on the button below the screen for the schedule for the next month or so. For today, we're here to talk about the economic crisis, or what we might be talking about as a new normal. I'm delighted to be joined by Professor Stephane Garelli. Stephane, many thanks indeed for being with us today. We've gone through, I guess it's fair to say, a succession of crises.
Yes.
The question is now, in 2013, are we expecting another one, or do we need to adjust our mindset?
I think we have had enough crises. So far, since 4 years, we have been living through a financial crisis, an economic crisis, a social crisis, in some countries, a political crisis. And the fundamental question for every company now is to say at the beginning of 2013, what is still from the time of a crisis and what are the new rules of the game which are likely to be with us for some years? From the time of the crisis, we could say, and we hope, that maybe financial institution going into bankruptcy, this will be the past. Maybe the market, the housing market, collapsing, this may be into the past. We start to see that it is recovering a little bit in the US. The real question now is, what are the rules which are going to define the new normal, this kind of environment in which we are going to operate in 2013 and beyond.
So what do you think those new rules look like? What are the rules of the new normal?
Well, the first thing is that it seems from an economic situation point of view that the world is still global, no doubt, but the performance of countries are very fragmented, very divergent. We can expect that in 2013, hopefully, that the United States of America will have a better year. We start to see better numbers on unemployment or employment. We start to see that the market still is recovering a little bit and more confidence. For example, the price of housing is increasing a little bit. So people expect that the US will probably have a better year in 2013, despite the fiscal cliff, despite all the question about taxation.
So let's talk about the fiscal cliff, because there's been a lot of negotiation and posturing, frankly, over the last few weeks on the fiscal cliff. Has any real kind of solution been brokered? Are we just pushing off bad news down the road?
I think we are postponing a little bit the fiscal cliff and saying, we didn't have it in December, why not trying to have it in March? March will be the critical month, because this is a month where you will have the discussion on the budget. This is a month where we will have to have also discussion on the so-called debt ceiling, which is $16.4 trillion, and that's where the US is now. So yes, there will be some increase in taxation, there will be some discussion to reduce the spending, but a lot of the critical issues to reduce the debt level of the US will take place during the next 2 to 3 months. And I think this is going to be a very lively debate indeed. So the US will recover. Probably, I think people are rather optimistic in this field. China is having some better numbers also. If we are looking the third quarter on the second one, China was growing again 9.1%. So there is some hope. These are the two largest economies in the world to some extent, so we hope that the US will pull out Europe, that China will pull with it Asia. Some countries are a little bit more volatile. I'm thinking about Russia, India, and especially Brazil, which has been a bit disappointing recently. Europe, stagnation probably for 2013, with a very big question mark, of course, for decision making, which is going to be the election in Germany, taking place in the fall. And when we are in an election period of time, we know that the governments have difficulty to decide in a nice and rational way.
So let's come back. You've raised a lot of issues there. Let's come back to China for a second.
Yes.
So we have a new premier in China who's described as reformist. What does that mean, and what will be the impact on China? We see there's some growth already, probably not attributable to him. It's a little bit early days. But are you expecting a change in strategy or policy that may impact growth one way or the other?
It's very difficult for us to know what's taking place in China beyond the screen that we see from the leadership. There is no doubt that the new president has said that he wants to conduce reforms, that he wants to go ahead with perhaps more emphasis on domestic growth than on the rest. But he's not alone. This is really a system which is made of many people in the leadership, many different factions. And I think that if there will be changes in China, there will be slow-moving changes.
You mentioned there Europe as well, and
yeah.
with the hope, some may say a forlorn hope,
yeah.
of America pulling Europe. Europe is still stagnating. It's long before anything that we might see as the first green shoots of growth. How do you expect Europe to be shaping up this year? Is it flat? Are we going to go down? What do you see?
At the best, it's going to be stagnation. At the worst, it was going to be a small recession, which is a pity because the European economy is a very large and significant one, and the enterprise in Europe are still very, very good. I think that we are still struggling with the issue of the debt. I think this is one of the issues which will not disappear overnight and which will be part of this new normal we have been discussing. And if you are looking at the debt issue, we are usually speaking about central government debt. Now we discover sub-sovereign debt, which means at the regional level. So we have a region like Catalonia, Valencia, etc. in Spain, which have serious problem of debt. We discover that even in Germany, half of the lenders in Germany have debt problems. Berlin, the capital, has a serious debt problem. So we start to see that one level down, this is a problem, and one level down the region at the city level, we have a problem. Sub-sovereign debt is one of the issues. And the second big issue we are discovering now is not only the banking sector, which had problems, is what we call shadow banking. All these institutions, parallel to banking, who have been performing banking-type operations and which actually are not regulated in a very nice way. This is a market estimated at $67 trillion. So we have a good time bomb there.
But it's not even a question of them not being regulated in a nice way. In some cases, they're just not regulated at all.
We are really in this very awkward situation. The shadow banking sector is not regulated at all, almost, let's not exaggerate. And on the other hand, we are moving into a situation where the banking sector may be over-regulated. Because if we are taking the Basel III agreement, this is 616 pages of very exciting financial ratios, which are quite difficult to understand, to be honest. If we are taking the equivalent in the US, our American friends have done even better. The Dodd-Frank Act is 848 pages of regulation again. If you turn this into implementation and rules for bank, it has been estimated in Europe we are going to have about 60,000 pages of regulation on the banking sectors and only 20,000 in the US. So we are fighting complexity with complexity, which is a little bit absurd because this is becoming unmanageable. And then in other fields, we have nothing, almost nothing. So we are going really from one extreme to the other.
So what's the solution then? If it's not going to be the 20,000 or 60,000 pages of reports, what can be done in concrete terms to bring regulation to an industry that, let's be honest, needs regulation?
Yeah, exactly.
But perhaps the pendulum has swung too far in the opposite
direction. Yes, the pendulum has swung. And actually, I even have some problem with those poor guys in administration which have to monitor that because, you know, to monitor what's happening in the banking sector when you are a small office with 10 or 20 people in certain countries may be difficult. But really, I think it's a question of corporate governance, let's face it. I mean, there are things you do, there are things you don't do, independently whether you have rules and regulation and laws. And I think that there is a big cleanup which has to be done in not only the banking sector, the financial sector, but in business altogether. I think that this is really about corporate governance. I mean, the rules have to be self-imposed. They have to be the result of a corporate culture, of codes of conduct, of whatever, because if you don't do it yourself, then the government will do it, and it will be worse.
And we've seen examples about that. I know you've talked recently about the legitimacy of business. Tell us a little bit more what you mean about that. This idea that if you don't regulate yourself, someone else will do it for you. And you need to be asking, as a business, important questions.
If you are looking at management today, as we teach it at IMD, it has really three pillars. Management of efficiency, management of change, management of complexity. That is what it's all about. Now we start to see a fourth dimension, which is legitimacy, which is the society coming to business and say, why you? Why do you make so much money? Why do you get such salaries? Why do you give so many dividends? How can you justify all that? What do you do for society in general? And I think that this question of legitimacy is going to be a very central discussion now for business today. I think that the business community cannot simply say, I'm here to increase shareholders' value. This is something of the past. Of course they should do it. But this is something for the past. I think the people expect more. Our young student at IMD, we see it. Our MBAs, they don't want to work for a company which is just making money. This is gone. And Henry Ford used to say something very nice. He used to say, you know, a business that makes only money is a poor business. And I think it's very true. We need a bit of dream.
So we need a bit of dream, and we need to be accountable to the stakeholders, but also to people in society. We see with the rise of social media that individuals have more power, that governments have more power. How is the power balance going to play out in the next 12 months?
I think it's going to be very difficult because business will have to show what it is doing for the society, for the community in which it operates. We see it with a very interesting trend also, which is reshoring. Now, a lot of companies are under pressure to bring some of the business back home from China, from India, etc. So General Electric, for example, is bringing some of the household appliance business back to Louisville, Kentucky. Apple, Hewlett-Packard are saying we are bringing back some of the business to the US because we understand we have to create jobs, we have to create business, we have to be part of the country where we live. And I think we are going to see this kind of pressure increasing more and more. And the second thing is, of course, a relationship with your image. I think that business has to learn to better manage its image. It's going to be a critical issue in 2013 because we have the problem with the media. Traditional media, we know how to deal. You know, the newspaper is saying something bad about you, you know the journalist, you know the newspaper. But suddenly you have a rumor which is taking place on Facebook, on Twitter or elsewhere. There is nobody in front of you. It's something which is faceless. So how do you deal with a social network, with the new media, with electronics? This is going to be a critical issue for 2013.
Now, another critical issue that you've alluded to is taxation.
Yeah.
For viewers watching today, should we be advising them to put money under the mattress and be prepared to pay more taxes moving forward?
Yeah, maybe we should all consider moving to Russia. But I mean, there is probably a very big issue because government needs money. They have tried debt, now they reach a debt ceiling for everybody else. So I really believe we are going to see increase in taxation a bit everywhere. This is what President Obama has done in the United States of America. This is what we are going to see on capital gain tax, moving 15 to 20% in the US. But everywhere, I think capital gain tax will be reformed. Corporate taxation, especially corporations operating internationally, they will be asked to produce more money back home in forms of dividends, etc. Financial transaction taxes in Europe, you know, the so-called Tobin taxes, maybe again an issue. I think the imagination of government to find new taxes is going to be limitless.
So let's move quickly on. We don't want to depress people at the beginning of 2013. Let's look at the commodity market. How do you see that playing out in the next 12 months? How is that going to affect competition and competitiveness?
Competitiveness, a very big impact, a very huge revolution is taking place now. And it is a fact that for the first time in many years, the United States of America is becoming again an exporter of gas and oil. We have never seen that before. It is expected that in 2015 the US will produce more gas than Russia, that in 2020 it will produce more oil than Saudi Arabia. And this is going to be an enormous revolution in competitiveness. First, because of course it means that the US is going to become more self-sufficient. Second, because more and more investment are taking place in the US in those sectors of industries, and it creates jobs. And it creates revenues in the US, good for the economy. And finally, it means that the cost of electricity for the corporations in the US is going down. The German Federation of Industry has estimated that in 2020, the cost of 1 kilowatt hour of electricity will be half the price in the US as it will be in Germany for corporations. So imagine the competitiveness advantage it will be for the US compared to the rest of the world, and especially Europe, if suddenly the price of energy is going down in the US compared to the others.
So a lot of what's going to be happening in the US will be impacting the world globally. That seems to be something that we can't get away from. It seems to be something.
Maybe a good news, because it may be that the US is going to pull us out of this period of recession, and this is probably what we need. The US on one hand, China on the other hand. Maybe that's some light at the end of the tunnel.
And what about the emerging markets, and the emerging wealthy markets? How are they going to be investing in 2013?
They will continue to accumulate money. You know, there is no doubt about that. We are about $5,500 billion in foreign currency reserve. It's a lot. So I think they accumulate a lot of money, and the way they are going to spend this money is going to be quite different. Up to now, it was about financing the debts of the industrialized nations, and then they find out that maybe there is a better way to use the money. And I think the better way to use the money is going to be finance the globalization of national champions. So state-backed and state-owned enterprise will receive a lot of money from government to become global, to conquer a new market, to buy companies. We start to see that now for the first time. China seems to target Europe as a region of the world where you can buy companies. Quite new. Before it was only Africa and Latin America, now it's Europe.
And what about, finally, to wrap up today, what about the whole social aspect? We see what's going on in Syria, we see revolutions, we see on a lesser scale, but still very big impact on employment and rising unemployment. What do you expect in terms of social phenomenon in 2013?
I think that we are looking at unemployment levels which are critically high, a bit everywhere, 11.2% in Europe, 7.8% in the US. We start to see that youth unemployment is becoming bigger everywhere. We are reaching almost 50% in Spain. We are at 52 or 53% in Greece. Sorry. So basically, the situation is that from this economic crisis, we are going into a social one, no doubt. But from the social crisis, we start to have a political one. Because in many countries, the younger generation is questioning the system. It's saying, you know, we have done everything you told us to do. We got an education. We have been working hard. We have got a mortgage. We have bought our house. It's still not working, and we are in recession, and we are in unemployment. Again, we go back to legitimacy. How do you justify this situation? We do everything and you don't deliver. So I think we have a critical issue which is going to come into perspective, and it will be how is the system justifying its existence? Because people are going to question it again and again, and this is a political issue.
Stephane, to round off today, for the business executive who are watching this webcast, what are the closing thoughts that you would like to leave with them concerning the outlook of 2013?
I would say let's be optimistic, because at the end of the day, the market is still there, the customers are still there, they are eager to buy products, the companies have technologies. And yes, I mean, we have been the victim of a financial crisis which has really degenerated very quickly because maybe the answers by the political world were not really appropriate or were not quick enough. But I deeply believe that the business is still there and the companies know about it. One indication of that, Paul, is that we are seeing that in Europe and the US, an enormous amount of cash is accumulated in companies. In the US, we are speaking about $2,100 billion in cash at the last quarter, and in Europe, $2,450 billion. So there is a lot of money available also in enterprises. They are not quite sure what to do with it now, but there is a lot of money available. I think we have industry, we have markets, we have people. Let's hope that all this will come together in 2013, and I think we will have a much better year than 2012.
Stephane, thank you very much indeed. Thank you.
Thank you.
And thank you for joining us today. I hope that's given you a bit of a flavour of what we might expect in the next 12 months. Do join us again next week for the next in our series of webcasts. Thank you for investing your time today, and we wish you again all the very best for 2013. Bye-bye.